essentially the rules do try to curb short selling. And authorities, as we all know, don't like short sellers because it does put a lot of pressure on their currencies. Now, that said, the rupee has been under tremendous pressure, as we all know, because of rising oil prices. India is a huge oil importer. And as you correctly pointed out, Has, there is a floor for now, but how long that actually holds, we've seen the rupee rally more than 1% against the dollar, well, that remains to be seen.
Of course, the rupee, the worst performing currency in Asia. Ruth, stick around. Let's get perspective from Abbas Keshvani, Director, Asia Macro Strategy at RBC Capital Markets. Well, the weakness will persist at some point.
I think it will, yes, because what they've done essentially is they've clamped down on speculators' ability to short the currency. And I won't quibble about onshore versus offshore. There's a whole argument about how much onshore matters versus how much offshore matters. But let's just say that they have dealt a blow to speculators to bet against the currency. The problem is the pressure on the rupee is not just from speculators. It comes from real demand for dollars in the economy. Right? Even before all of this kicked off in the Middle East, India had a very wide trade deficit, and that deficit is going to widen from around $30 billion a month to $35 billion a month. Right? So this is going to only mean more pressure on the currency beyond the short-term release and pressure.
What's short-term? How long do you think this rupee strength can go on for?
I mean, they've given them until April 10th to basically close out their short positions. So I think you could get a slow bleed off those positions going into that deadline. But I would be surprised if we had more than a couple of days of rupee strength, just because, like I said, every day that goes by, there's a refiner somewhere in India that has to buy oil. So they're buying dollars, and they're buying more dollars than they previously needed to, just because of the price of oil now. There's even reports of Indian refiners paying a premium for oil. Remember, before the war, they were enjoying discounts on some Russian crude. Now they're scrambling to buy their oil to make up for the loss of their Hormuz supply, and now they're basically paying premium. So there's a lot more dollar demand.
Are there other tools in the RBI toolkit to support the currency?
There are lots of other tools. I mean, I think if we look at what today illustrates, it shows a limitation in every central bank's abilities to just sell dollars on a protracted basis, because the RBI have been on the more interventionist side of the spectrum. And what they've done is they've sold a lot of dollars, both spot dollars but also forwards, to curb depreciation pressure on the currency, or at least meet dollar demand. And as a result of that, their reserve cover, their reserve buffer, has thinned considerably over the last few years. And now they're on to, I guess, what you would call the secondary or ancillary sorts of tools to ameliorate the depreciation pressure. Today is one of those examples. They could also impose on other places in Asia, like Malaysia, have imposed restrictions on the trading of offshore NDFs. I don't think India is in that place yet. If you look at places like Indonesia, they have announced a number of innovative tools to basically help onshore people manage their dollar demand through contracts with the central banks rather than through the market. These are very innovative tools. I don't think India is in a place to have to worry about these kind of measures just yet, but it does show you that they're getting to the point where they're considering the limitations of their existing toolkit.